update and kind of what Powell's going to be talking about, and just your thoughts on how or like what he could specifically say that'll affect the market.
Yeah. So I believe the testimony to Congress is twice a year. I may be wrong. It may only be once a year, but I'm pretty sure it's twice a year. Um, we're not going to get any new information really. But typically what happens is, it's a little bit tricky just because they pretty much grill him. They pretty much just grill him on kind of the stance that the Fed takes, right? They really want to get to the bottom of, why have we been paused for so long? When do we plan to start cutting rates? Is it more likely that we'll raise rates? What is the plan going forward, right? So a lot of it has to do with, um, you know, one of the things that people always get concerned with is, the Fed will never outright mention that they want people to lose their jobs, right? But employment is not the job of the Fed. Um, Price stability is. So typically, when inflation gets out of control, the primary way to cut it is, you need to see the government spending less money. You need to cut government spending, and we need to raise rates. That's typically the most common way that we see. That's commonly the most frequent way that we see inflation under control. And long term, that's historically been what works. But in an environment like this, where the government refuses to stop spending money, you need to see unemployment go up, right? And that's unfortunate because we need to see people hanging on to their dollar. When people are more hesitant to spend their dollars, if people get laid off, they're much more likely to hold on to their dollars and only spend money on what they really need, right? And so those consumer discretionaries, a lot of those frivolous purchases, traveling, vacations, all that kind of stuff gets pulled way back, right? And so companies have no other choice but to offer incentives or reduce their prices, right? And that's how we see inflation pull back and possibly even a period of deflation. Granted, deflation is not a good thing for the economy long term, but if it lasts for a quarter or two, it could be healthy. The main thing being, um, the Fed will never actively, or the Fed will never openly admit it, but they do want the unemployment report to go up. They do want more people to become unemployed. And so that's the main thing is when you are in government and you are a policymaker, you don't want the unemployment rate to rise under your term. That's a very negative stain, right? So basically, they're going to grill him on that. They did it last year where they grilled him on, you're trying to drive unemployment. And it's like, it's not really like what he wants, but it's what needs to happen to curb inflation, right? And part of that is rates, right? When you increase rates, it puts a lot of stress on companies to remain profitable, right? Their cost of debt is much higher. People are naturally spending less, so profits tend to take a dip. And if you want to keep margins high, the easiest way to do that, and the most immediate effect, is to cut your labor force. So typically, they don't have an actual hand in they're not forcing companies to fire people, but when you raise rates, it puts companies in a position to where that is the answer, right? So again, he's not.
Is raising rates the only way, or there ways to happen?
It's a great question.
Or is raising rates just kind of the main and significant, like direct correlation, kind of one that we can see?
Raising rates is the primary source of that, but it's not for the purpose of driving unemployment. That's not why they do it. The reason that why the Fed raises rates is to slow the economy, right? They're not trying to put a halt to things, they're just trying to slow the economy. Right? You understand the connection between higher rates and lower rates in the business cycle, right?
Yes,
Okay.
yes.
So the other way that they can do this, and again, this has a much smaller hand in both inflation and unemployment, but the FOMC. The FOMC stands for Federal Open Market Committee. And what they do is they're actively buying and selling bonds, right? And can typically control rates. So they have a huge hand in, controlling the supply and demand of bonds, right? So they can very easily move rates just by purchasing or selling bonds. So that doesn't really have a hand in unemployment, but that's another way that they control rates and kind of control the sentiment of the market.
See. Okay. So okay.
No, they're not adding buyers or sellers. They are actively controlling rates through the bond market.
I see.
But again, those are the two roles of the Fed primarily is to regulate the bond markets and regulate rates in that sector, but also the federal funds rate. And the federal funds rate is the bare minimum, the lowest rates that we can see. And you and I do not have access to the federal funds rate. The federal funds rate is 5.5%, right? If you want to go get a mortgage on a house, it's 7% or higher right now. If you want to, um, if you want to take a loan out from a bank, you're not going to get anywhere near 5.5%, right? That's what the banks, you know, that's what they're getting to. Oh, geez, it's a lot. I'm like, my brain is going in like four different directions right now with how I want to tackle this. Um, Basically, that's where they set the bar for businesses to conduct, right? And then they have to still take a profit. So for banks, how they manage their deposits, they still have to make a profit, right? So that's where we get that premium
So
on bank loans.
it's between 5.5% and 7 or 8%.
Yes, yes, precisely. So
So pretty much, and would you say most of the time when that 5.5%, that Fed rate changes, all banks generally change their rates in unison?
yes, because you have to think there's competition, right? If the federal funds rate dips and one bank is still sitting around offering mortgages at 7% and another bank is offering them at 6.5% now, which one are you going to take? You know.
Yeah.
So yes, it does work in unison because there is still active competition amongst those banks.
Okay.
But generally there's not really much gouging in that sector just because, you can't really cut your profits too much while also remaining competitive, right? You
Yeah.
can't focus on, you know, what's the word I'm looking for? Oh, I'm drawing a blank here. Um oh geez, man, I lost it. Sorry, my brain's kind of fried. I've been at this computer since 6 a.m. What was I gonna say? A lot of it just comes down to unison because, they kind of agree, we kind of want to make this margin and we can all remain just as competitive and just as profitable.
Yeah. Makes sense. Sort of specifics on ES prior or during statement, or are you just kind of waiting to see what the market does? Like what key levels are you watching going into 7 a.m.?
It's very easy in my opinion. So the top of the previous balance is 5105 right here, right?
Okay.
Granted, on any other given day, it would be very easy, right? After a sell off like today, where we tested the bottom of the balance and found buyers, it'd be pretty easy, right? This was the spot to long, the 60 retest, as close as you could get, and this is the spot to short. On any given day, if we trended into this 5105 level, I'd be trying to short it. But if we get down into '06 or 60, this is the spot to long. However, you don't really want to play that before Fed, right?
Right.
My guess is, we're not going to see a knee jerk reaction right at the bell, right when he starts talking, right? If we do see any volatility, it's gonna come from, a random part of the session, right? They're gonna ask him some tough question, and he's gonna maybe. It's fucking long, dude. It's like 2.5, 3 hours. And it's 2 days. So they're doing today or they're gonna do Wednesday and Thursday. Yeah, it's long.
Let's like, did you expect the same, or let's we get a first reaction tomorrow? Thursday is just gonna kind of get back off whatever Wednesday happens, or you just don't really know yet.
That's really tricky. I have no clue what he's gonna say, or we could genuinely see massive reactions to either side. The only way that I'm approaching it is, on any other given day, like I said, we'd be risking against this '05 level. But for me, this is the line in the
Right,
sand because because there is event risk that can drive volatility. I'm looking at it like this. If we get back over '05, bulls are in control, and we should expect to buy most of this back and head back into these highs. If he says something
right,
hawkish, obviously I want to get in shorts beforehand, but if we break under 60, that opens the door all the way down a long ways to about like 498.
right.
So I do think tomorrow we're seeing a big move. I think tomorrow we are seeing a big move. I can't tell you which way it's going to be. I don't know. I don't know what he's going to say. I don't know what kind of questions they're going to ask, whether he's going to falter or if he's whether he's going to come out confident. I have no clue. But I do think that if we rally tomorrow, everyone who got short today is going to get squeezed out and we can easily find ourselves back at the highs around 40 to 50. And if we fail, all the people who longed this, they're gonna have to get covered, and we could easily shoot. This is not the time frame I wanted. If we do see a negative reaction, right? There are a lot of people that are long from all the way up here, right? That are still probably holding this through Powell. A lot of people who are long during this period who are kind of wondering, there's no reason to stop out yet. We could easily liquidate if we fall back under 60, right back into the big spot. I'm looking at it as 50-20, but under 50-20, you've got room back into 498. So again, it might be a chase. I think the best entry tomorrow will probably be a chase because you'll get some crazy volatile reaction that either pushes us back over '05 and we can look towards the highs, or we'll get some big sell off under 60 where we can look for a lot lower. So these are my two areas: 5105 and 5060.
Right. Yeah. Yeah. That makes sense.
But like I said,
Yeah.
it's definitely a different day, right? If it was a
Right.
normal day, we would be risking shorts against 5105, and then stop losses would be a break over. And if we were,
Right.
we'd be longing 50-60 and a stop loss would be a break under, right? So
Like here you're playing a breakout or a breakdown.
yes, yes.
And are you though in this case, because the market is going to be still volatile, are you kind of waiting for a break and hold or break and retest, or are you kind of buying at any seems like strength over these levels?
Probably strength over or weakness under. But I will be honest,
Right,
I don't want us to get too excited because it could be a complete dud. It could end up being a
right,
very slow session with us all kind of waiting, twiddling our thumbs, like, oh, what's he gonna say? And it might not be anything crazy, you know. So if that's the case, we may have to figure that out mid-session. If it so the testimony starts at 10 a.m. Eastern, so that's 30 minutes after the open. If we find ourselves around 1 o'clock and nothing's happened, we'll have to kind of make a decision and go, okay, well, it's time to kind of revert back to any normal day. Risk against '05 and 60, right? Instead of
yeah,
playing strength over or weakness under, we'll have to revert back to risking against those levels.
yeah,
But
yeah,
if we do see the volume and the volatility that we expect, which we're all hoping for, that's where we're like, okay, strength over or weakness under is the chase play, as I would call it.
right. Okay, sense. Questions, but if anyone else would like to go, I feel like I'm kind of hugging the session at the moment.
It's just you, me, and Cooper here, man. Low turnout
All
tonight.
right, you got anything or no? Okay. Um. So on Bitcoin, kind of heavily rejected all-time highs. Um. Today, like very heavily rejected all-time highs. and I was kind of looking for shorts on specifically CLSK. As we're kind of sitting in a volume shelf. From where end of day, we kind of ended up just kind of sitting there. And if we can continue to see a Bitcoin breakdown, I was wondering just kind of your thoughts on both the continuation of Bitcoin and whether or not CLSK can piggyback off of that movement.
This is a tough one, man. This is a Bitcoin proxy.
Yeah. Yep.
It looks pretty bad. So the one spot that I see has gotten a ton of respect and has acted as a floor here is this 15 level. 15 has gotten a ton of respect. It's basically defending you from a pretty sizable breakdown here. If you were to break back down, there's no volume here until, let's see. There's no real volume here.
Looking for this breakdown. Looking for this breakdown.
Oh, then well, let's check out Bitcoin.
Yeah. So we're talking about Bitcoin had massive. It hard rejected all-time highs today, and so I'm looking for that breakdown down into that huge volume gap.
Wow, but it made all-time highs. Crazy.
Right.
I don't necessarily think this is going to break down. To be honest, they already stepped in pretty heavily. And this is definitely a blow off top, but buyers have stepped in pretty aggressively and they're holding really well. We're already kind of bouncing and reversing it back. I don't think there's anything wrong with Bitcoin. But in the case I'm wrong and we do see some nasty pivot, CLSK, right? If that's the case,
Yeah.
15's your level. 15, very clean spot.
Yeah.
You know, it's been the spot they defend. It's where buyers have shown up, and now they've kind of failed a reversal attempt. I would definitely be looking for just weakness under 15.
Right. Yeah. Okay. So what do you see in Bitcoin that kind of tells you it's still? I mean, like that it's still kind of holding up that area. And what would you say would show you this like continuation move up or continuation move down, or would you say you're kind of looking for kind of consolidation? And also for context, so do you know what the halving cycle and everything coming up is?
Yeah, I've got an idea, but I want to be honest. If you want to get like more into like crypto internals, I'm not the guy for it.
No, that's totally fair. But yeah, pretty much, it's in like 30 days. In a month, we're gonna drop from like mining like 24 Bitcoin per, or actually going from like 12 to like 6.
Yeah.
So it'll half again. But yeah, what are your thoughts, just chart wise? I guess.
Chart wise, I mean, the last place we built any value at was right in between here, between 64 and 61 and a half, right? So this big old shelf here. We dipped to the bottom of that lower liquidity like taper area, and we've already seen buyers step in off of it, right? So this
Right.
spot, it made perfect sense, and this was no struggled bounce. This is a 30-minute chart. They didn't even close anything down there. They immediately picked it back up. So right where we are right now, you can see 64 has gotten a ton of respect. They're kind of fighting here now, but so long as we can defend 60 61-ish, I don't think there's anything wrong with this chart. I mean, anytime you have like a blow off top like this that gets shorted that aggressively, you definitely want to be on watch for kind of like a top. But the first spot they needed to held, they were able to hold. So if anything, it still looks like this will just accumulate, and we'll probably be able to in a couple days be able to make another shot at these highs.
Right. Right. Okay. Yeah.
Yeah.
Here as near like selling, but I do see what you're talking about. How that is just like the top was the first rejection first spot for rejection, that's the first spot for buying.
Yeah.
Right.
And let me
Yeah.
mark off. Let me mark off that previous all-time high. What was it, 69.33 or something?
Now I guess what you're saying, we're just in decision mode.
Precisely. I wouldn't be surprised to see something like this action happen. You saw a rejection, but they're still kind of contesting it. Now, if we make another shot at these highs and reject again, that's a whole different story.
Right.
But for now, I would imagine, if we want to look, you know, this isn't the full chart, but have you guys seen like the full Bitcoin chart? Every time it does this, every time it makes a new high, it typically sells off like 50%, which is more than what we saw here. And then it
Yeah.
typically breaks higher. I have a good feeling that this time around we're probably going to see a breakout. I wouldn't be surprised. Again, going purely off of technicals and how Bitcoin has acted over the last 10 years, if you look at this structure, let me find a chart to post real quick in Stock Talk for you. Okay, let me grab that real quick. Images, give me just a second. Okay, I think I got something here. I'm looking for a specific chart. I saw it just the other day. Well, this kind of goes in relation to your halving theory. I just posted in Stock Talk. But anytime Bitcoin makes this high, you typically get like a 50 to 60% sell off, which, like I said, this most recent pullback was more than that. But when it breaks that high, it runs. You see another couple 100% run. Again, I don't want to be too bold here, and again, if we're talking cryptos, I'm not really your guy. You guys know me. I live and breathe stock options, but I wouldn't be surprised to see 100K plus here over the next couple months. There's nothing like again, we saw a pretty nasty sell off recently, but like there's nothing about this so far. So long as they're above 61, there's nothing that makes me think this is a top.
Yeah. It's TR of these past.
Yeah, Master's been pretty crazy.
Yeah, it's ridiculous. Yeah, it's play. See.
I noticed all the proxies had a pretty rough day. You know,
So that kind of thing. So even though Bitcoin has kind of nearly actually so let's see, starting last Thursday, I think it started to set up again. It set up on Sunday and then broke out Sunday, and we saw nothing from any of the proxies. They all
yeah, reverting back to what we talked about, last week was that all these proxies, they're all companies, right? They all have an intrinsic value. Cryptos in general, there's no profits, there's no growth, there's no dividends, there's nothing like that you can base an intrinsic value on. It's only worth what someone else is willing to pay for it, right? It's going to have catalysts that are going to drive sentiment in the space, but at the end of the day, it can run forever and ever so long as someone else is willing to pay for it. These companies, however, they can get overvalued. They do have revenues, they do have growth, they do have I don't think any proxies have dividends, to be honest, but they do have an intrinsic value. And like we said most recently, is unless the company is directly holding Bitcoin, there's not a justified reason for them to skyrocket. Like, for example, just like Coinbase. Coinbase is a crypto broker, which means the more popular Bitcoin is and the more transactions that are occurring, the more money they'll make. That's a direct correlation. Um, Master, on the other hand, directly owns, like, I think the valuation of MSTR is like 22 billion, but they hold $12 billion in crypto. So, if if crypto continues to rally, that's like the most direct correlation you can get, right? So, they still have valuations, and depending on how tight the correlation is directly to Bitcoin, it's gonna vary. But again, these companies, if they don't pay a dividend, that subtracts their value. If their growth isn't that strong, there's no reason for them to match the exact percentage that Bitcoin moves. The only one that has the best case for that argument is MSTR, because they hold a fuck ton of crypto, and you know it's the most direct correlation. It's pretty much 1 to 1.
Yeah. Yeah.
But
Trying to think of like some other questions.
you're good. You're good. Here, take a moment to think on it. A few more people have joined. Let's see if anyone else has anything they want to check out. The really Asian, or the really yellow Asian. What's going on, man? Nice to see you hop in here. Um, Doggy Pluton, Daniel. Nice to see you guys stop in. Do you guys have anything you guys want to check out? Any charts, general questions, anything like that? Anyone? Anyone at all?
Not at the moment, no.
Oh, well, shoot. Thanks for speaking up, man. I notice you're new to the group. These sessions, again, they're primarily member led. It's just time away from the open market where we can just kind of go over play reviews, talk about charts, answer general questions, and so if you have anything, if you think of anything, feel free to speak up, man. It's a discussion, not a lecture. So hell yeah, man. Yeah. All right. Well, Captain, no one else seems to have anything. If you thought of your next question, we can go ahead and tackle it, man.
Yeah, it's kind of a question or something to talk on. I specifically did we see the banking sector up today while the rest of the market was down 2%.
Oh, that's a good question. I don't think I have the answer for you, to be honest.
Just kind of like, yeah.
Whole sector was green today.
Yeah.
Wow, even regional banks. I don't have an answer for you. I mean, I can do some quick research real quick. Let's see if there's any data on Bloomberg. Give me just a second. People are saying it's rotation. A lot of people are saying it's just rotation out of tech. I don't think that's the case. Most of what I'm seeing is just people talking about how banks are up today. A lot of people just saying that it's rotation, but
I mean, sometimes there's just no explanation.
yeah, there's not much. Everything I'm seeing that could have been a driving factor for it is a couple days old. Yeah, I don't see anything of value. That's odd.
Let me see. I want to see if I can get like a here. So all of your plan plays are like or calls. Um, are you leaning like market upside tomorrow? And although I know you're kind of hoping for market downside.
I'll be honest.
Uh,
I'll be honest. I treated the planned plays as if we didn't have event risk tomorrow. Um, the only one that we'll be able to play regardless tomorrow is CrowdStrike, which I'm already kind of upset because
Yeah.
they kept running after I made the planned play. Yeah, they're up to 367. Yeah, I made the planned play when they're at 350, and they already touched like 375. So yeah, some areas that we'll be looking at tomorrow. This is obviously named. They absolutely crushed earnings. They beat expectations by 16%, and on top of that, they announced that they're following through on a pretty large acquisition of another security company. Um, so this thing's going to have a ton of volume tomorrow, especially after a stellar beat like that. They're all the way at all-time highs. There's no previous price action to play off of. So some areas that we'll be kind of focusing on tomorrow, obviously that high made at 378. And then this area got some respect as well. They liked that 360 area, and hopefully we don't see as low as 350 again. But we'll have to see in the morning kind of where the structure kind of forms and where buyers continuously show up and where we can risk against. But CrowdStrike, I imagine, is probably just going to be a long off the open. I do think that we might be able to just catch a quick dip, maybe into like 360 and play longs. Again, with targets probably towards that high. Contracts are pretty nice, honestly. If you look at we closed the session. Actually, no, they were pretty expensive. But anyways, CrowdStrike doesn't typically have the best trading volume intraday, but on a day like today, when there's going to be a bunch of volume on these contracts, it's definitely going to be worth focusing on. And with an earnings like this, nothing crazy. It's not like they announced a dividend or a stock split or anything like that, but a pretty incredible beat on their earnings and announcing an acquisition to expand the business is always positive, right? Um, What's weird though, little side note, sometimes you will get negative reaction to acquisition news. And the reason for that is because sometimes people may think that, the acquisition is overvalued, right? So let's say you have let's say your company has, I don't know, 500 billion, or let's think of a logical example. Let's say your company has $20 billion in cash assets, right? Or cash equivalents. And your company has, you know, $5 billion in debt, right? You have a 4-to-1, quick ratio, right? That's very strong. If you're making an acquisition of $15 billion, that cuts your cash or cash equivalents down a ton, right? And it immediately affects your quick ratio, all sort of those fundamental metrics that people use to value a company. And so if you're spending cash like crazy and it's something that isn't going to like immediately affect the profitability of the business, people may look at it as a negative, right? Because you're depleting your kind of safety net or your comfort with that cash or cash equivalents balance, for something that may not pan out how you want, right? So again, I think this acquisition, especially if you're paying over premium, like Twitter, for example, they stopped trading. I think what was it like? Is Twitter even still listed? I can't even see it anymore. Yeah. Anyways, see this right here, 54.20. That's what Twitter was purchased for. That's what Elon Musk paid per share. The last day of trading, Twitter was trading, if I remember correctly, at like $42 or something, right?
Wow. Uh-huh.
Yeah, so you pay a premium, and that's normally how it goes.
Right.
You're never gonna see an acquisition like just a random example. If someone wanted to buy CrowdStrike, right? It closed the day around $300. You're not going to see some other company buy it for $310 a share. You're going to see the offers come in at like 400 or 420 or 450 a share, right? So you're paying a heavy premium to buy them.
And how do the investors benefit off this? Do they get to sell their stock or
They're credited.
whoever had previously bought the stock?
No, you're
They're
credited.
the difference?
If I own, I don't know, let's look at Netflix, right? Netflix is trading at $6. Netflix is too big of a company to get acquired. It's never going to happen. But let's say I own Netflix at $600, and today after close, some company offers $750 a share to buy Netflix, right? First of all, tomorrow, if it's still trading, the stock's going to fly. It's going to fly very, very close to 750. It probably won't go over, but it's going to fly very close to 750. And then
Uh,
once the merger actually goes through, your account, it'll close the shares and you'll be credited with that $750 a share. Does that make sense?
sorry, guys.
Yeah. So let's say the merger goes through and the shares are only at 720 or whatever. On the day of the merger and it stops trading, your position will be closed. Your account, your shares will be liquidated, but you'll be credited the amount of the merger price or the acquisition price. So even if the stock's only at 720 on the day of the merger, and they're buying it for 750, your shares will be closed, but your account will be credited 750 per share.
Wow. Okay. That's really interesting.
Yeah.
And let's say that a company knows that it's failing. Would it sell its stock for less than it's priced at?
Yeah, it's called an offering. It happens all the time. Yeah, shares companies issue new shares all the time, and it immediately devalues the stock. So for example, if you have a company let's do a really simple example. If you have a company that has 100 shares, each at $100 each, right? The company's valued at $10,000, right? You have 100 shares at $100 each. Really simple, $10,000. If I issue 100 more shares at $80, right? So I'm doubling the amount of equity in the market, right? Even if I only offer it at the same price, right? You don't just double you don't just double the market cap, right? The market cap remains the same.
Right.
It
Yeah.
If anything, you can't just issue more shares and all of a sudden your company's worth more. So people typically sell to the average. So if I issued 100 more shares at an auction price, typically because people know that the outstanding shares is doubling, what's the average of that? If we're still a $10,000 company, each share is going to probably go down to close to $50 a share, right?
Right.
So companies issue new stock all the time, and that's solely for the purpose of, hey, you know, um, we either own not enough of our stock to sell it and make a profit to engage in, you know, business endeavors. We need to issue more stock. That's the whole reason companies go public, is because they need outside investment, right? Um, Private companies, you can still sell equity in private companies, but it's not like buying shares. It's a whole different process. But typically, private companies, deal exclusively in debt, right? They take out loans. They acquire other investors through that means. But yes, those are the two primary ways that a company is funded, is either through equity or through debt. There are pros and cons. There are pros and cons to either, but um, yeah, if a company is not doing so well, if a company is doing well, they typically have cash reserves. If you look at Apple, you look at Meta, you look at Amazon, they have cash reserves that they use to spend on R&D and development and all that, right?
Right.
But if a company's not doing so well, or their stock is doing really poorly, if they need cash to continue operations, that's what they'll typically do, is offer more equity. And it's simple as that. It's just called an offering.
Yeah. Okay. Yeah. That makes a ton of sense.
Um,
Um.
wow, we're covering a lot of the Econ 101 stuff tonight.
Yeah. I mean, I'm trying to like. I mean, this. I mean, I go to school for econ, so most of this stuff is like I know, but not specifically related to the stock market. So it's really interesting to you know kind of connect all the dots. Let's see. Um,
Kind of breaking up there, man.
and something. Right. Sorry. Uh, can you hear me better now?
Yeah, a little bit.
Okay. Gold has had a monster last 3 days. Is it something fundamentally that happened, or is it just kind of just absurd volume and just breakout kind of? because I know we were kind of consolidating down to this 2030 level, and then we kind of just skyrocketed as soon as we broke out of kind of 2050.
Are you? I think we're looking at different charts. Which one are you looking at? I usually use the Select Spider GLD ETF.
I was looking at gold futures. My bad.
Okay.
I'd go.
What's
back to GLD.
okay? Sure. So you could.
So we kind of. So go ahead.
You can definitely attribute part of it to a technical breakout. This thing's been setting up for the last 3 years. But on top of that, notice when this happened, right? When did we really start to pick up? Here's COVID, and then here's rate cuts, right?
Right.
And we kind of leveled out. We started to raise rates here. This is when rates started to raise, right? And since then, now we're breaking out again. It all has to do with rates just because people are expecting the value of the dollar to, if inflation is high, a lot of people just expect that the value of the dollar is going to continue to depreciate. And so, again, commodities are going to move off of very, very different catalysts than stocks will.
Right.
So, again, I think what's happening here over the last couple of weeks is people are after the hot CPI print and after the kind of on par PCE print. A lot of people are pretty much just expecting that rates are going to remain unchanged, and we might even be heading towards a rate hike.
Right. Yeah. Uh-huh. Which obviously will send gold higher.
Yes. Yeah. If the value of the dollar, if CPI comes in hot again, it'll definitely be good news for gold.
Is is the price of gold? Do you think the price of gold is ever like so? Pretty much, gold will move as far as the dollar depreciates.
I mean, probably more, to be honest.
Right. So yeah, I guess that makes sense because there is a limited amount. It's the same thing as Bitcoin. There's a limited amount of gold in the world, and I guess as we continue to kind of take care of that supply, and the dollar continues to depreciate, gold is still gold.
Yeah, I mean, again, I wish I had more kind of a base understanding for commodities.
Uh-huh.
But again, they're going to move off of different catalysts. The main ones being the dollar supply and the value of the dollar.
Yeah.
That's what this is primarily going to move based off of. So if inflation comes in hot again, a lot of people are going to have expectations that commodities are going to increase in value
Yeah. Yeah.
because commodity prices are universal, right?
Right.
So it all depends on the currency that they're kind of trading against.
Mhm. Yeah. Okay. One final question here. So I was kind of looking at this I was looking just at this energy stocks that I liked for like just shares because the option volume is shit. Um, I kind of wanted to dive deeper into just kind of what the company does and figure out whether it's like, you know, whether it's growth. I just wanted to know what do you look at if you're looking for like what news sources are you looking at? Like what like maybe like the news provider and what specific just like let's say you want to take a quick evaluation of a stock whether or not it's profitable or looks continuously profitable, like what are your main just go-to's when it comes to that?
Sure. I mean, it definitely depends on whether your company is a growth company, whether it's kind of already established. I mean, you could argue that Amazon is a growth company, but at the same time, it's already very much established. The only reason it's people would consider it a growth stock still is because, it doesn't pay a dividend. It still uses its cash to continue R&D and all that. So the main thing you want to look for is growth, right? Is the best way to look at growth is through the standard measures, is just, EPS, revenue.
If you want to use my specific example, AMPS, and you can just like let's say you were to make just like a quick like like log of this,
Sure.
what would you kind of be looking at?
So the first thing I notice is EPS is all over the place over the last couple years.
Right.
And this can be attributed to a number of things. Either the product or service they sell is seasonal, or whether it's, what do they do, for example?
I think last time I checked,
ANPS,
I think it was something in
a clean
either solar
electrification company,
energy.
develops, owns, constructs, and operates roof, ground, and carpet-based photovoltaic energy generation and storage systems. So it's solar, right? It's energy and solar.
Right. It also looks to be down 6% after hours. It's interesting. Right. Yeah. So it is part of the solar kind of energy sector.
Okay, so energy's been through the ringer recently. They've definitely been all over the
Right.
place. But if we are looking at their fundamentals, right? Let's look at annual. Um, nice solid PE ratio. They're definitely not overvalued. Price to cash flow. Price to book. Just trying to see. I wish I could see this. So no dividends. EPS has grown yearly. That's positive. So I'm looking right here. A lot of these are just very standard fundamental measures. If you're looking at a company like this, if their market cap it's only $1 billion, so this is very much a small company. You definitely want to see up here, top right. I wish I could highlight it. I can't highlight it, but these measures, you want to see these continuously growing. So,
Yeah.
EPS, it's a little all over the place. And the reason I say that that's not something to necessarily worry about if it's all over the place is because it could be they're spending money on research, right? Or they're
Right.
building a new facility or something like that that takes away from their earnings, right?
Got it.
So in a growth company, it's okay if it's a little bit more sporadic. That's why you kind of want to go towards the annual trend. And we just don't have a lot of data here. It's giving me a lot of not
Right.
available. If you go to
Yeah.
if you go to Bloomberg or Yahoo Finance, they typically have way more in detail um, uh, financial reports. Right. So is this company even public in 2019? It wasn't. So yeah, we're not going to have data from those dates. The next thing is free cash flow. Ooh, I don't like negative numbers here, and it's getting bigger. That's not great.
Right.
Um, cash flow. Cash flow's fine. Book value per share is good. So this means that they're acquiring more assets, right? Either they've accumulated more buildings or they've secured more you know,
And you're seeing that through decreasing cash flow and increase in book value.
Yeah, so a decrease in cash flow, but an increase in book value likely means that they've spent a good chunk of money on, investments such as buildings or infrastructure or, you know, um, vehicles or whatever it may be,
Right.
right?
Right.
So they're kind of just building up their base right now, you know, kind of like how, Amazon has a bunch of warehouses and they have delivery trucks. They're in that phase, right?
Right.
Where they're I don't know what they're actually spending their money on, but you can see that because their book value has increased, but their cash flow is kind of going down, it means they're making a lot of investments at the moment.
Right. Yeah. Okay. Yeah.
Again, I want to take a look at Yahoo Finance with this one just because I want to see a full
Right.
financial report.
Yeah. And would you say so? Kind of less when you're looking on Yahoo Finance and Bloomberg, obviously you're looking for the less kind of opinionated articles, like and just the ones that specifically kind of just give insight to what the company is doing.
Well, not even articles. If you're reading a financial statement, it's every single one of my professors would tell me this is that a financial statement tells a story, right? So that's
Right.
exactly what we just did there. Was we looked at,
Yeah.
we looked at one metric, compared it to another one, and we're able to make a judgment call based on those trends, right?
Right.
So that's what you'll see that, but in much greater detail on a financial report.
Got it.
Thinkorswim, for whatever reason, the only like something about small caps, they don't have the most great data, and it also doesn't help that they weren't public. They've only been public for 2 years. That's not a great read of historical growth. Um,
Uh-huh.
but if we look at a company like, let's say, like Target, for example, right? Target already right off the bat, they've got way more in depth stuff. If we look at where is why do I not have earnings? Here we go. No, this still isn't it. Okay, I guess Target was a bad call. What about Walmart? Here we go. Boom. So Walmart, you can see there's nothing that's not available, right?
Right.
Everything's here. You get
Yeah.
a very clean read. Sales per share, right? Sales over the last 5 years has continuously increased. Um, earnings per share has kind of been all over the place. The reason why it's probably been downtrending for the last 3 years is because they've done a good bit of expansion. Walmart
Right.
has rolled out a ton of stuff, right? There's Walmart Healthcare. There's Walmart. There's a bunch of stuff that Walmart's been working on over the last couple of years, and most recently, you can see in the last year, a lot of those investments have started to pay off, right? Um,
Right.
Dividends per share, right? Their dividends, they're increasing their dividends. That's always a positive. Every year it looks like you're getting an increase in dividends, right?
Right.
So this is an example of like what you want to see with smaller companies. There's a lot more like fill in the blank. There's a lot more kind of deciphering.
Yeah. Makes a lot of sense. Is there anything that you're like long term investing in? I mean, in the last like couple months, or you kind of sitting on your hands waiting for better, obviously risk reward total market wise? Because I mean, I know we're at like
Yeah,
high right now.
I'll be honest. I mean, I had a lot more time in like 2018 and 2019 to kind of, you know, dive into those smaller stocks and kind of pick and choose, based on management, based on sector and all that, kind of more long-term investments in small companies. I haven't been too focused on them in the last couple of years.
Yeah.
I pretty much have my set portfolio of kind of big names that I like and want to hold forever. But I will
Right.
say the number one that I love and have loved is Alibaba. Alibaba at these
Yeah.
prices is a fucking steal. And everyone's all worried because it may get delisted because, of tension with China, and people are worried that the government kind of has too much of a hand in their business practices and all that. But realistically, if this was an American company and they were putting out these type of numbers, it
Right.
it's absurd. They would be 5 times this price. So I think
Yeah.
over the next 5 to 10 years, Alibaba is probably going to be one of the best investments. I've been buying it a ton recently. Anytime it dips under 70, I pick some up. Um, I love it. I think it's a great name. That's primarily the one that,
Yeah.
like, even at these prices, even in this current market environment, I'm buying more of.
Right. Right now, but for like all of the health, we'll expect a good session tomorrow.
Yes, very excited.
Sir.
Oh yeah, man. You
Great.
have a good
Have a
night.
good night. Yeah, you too. It works.
What's up, Dorit?
I ain't got much time, so I just want to quickly come in and ask. I see Whoozy and I noticed Wizard posted an alert for calls tomorrow. Just wondering what you're thinking.
They're taking a gamble. I mean, I talked about this at the beginning of the session, but tomorrow's 50-50, right? Um, no one knows what Powell's going to say. No one knows what, questions he's going to get grilled on. If anything, I do believe there's a good likelihood that we're going to get some clarity on how unlikely a rate cut is. But with that being said, right, we definitely saw a bit of a, shooting star here over the last couple days, and we've definitely fallen back into the previous range, though buyers stepped in exactly where they needed to, right at 50-60. So, it's anyone's game right now. It's going to completely depend on any reaction to Powell. Um, Again, if you are playing longs, I do think you're probably on the right side of risk. Again, the trend is bullish. We haven't broken anything significant. If we fall under 60, I would argue, okay, yeah, the trend higher has been broken, and bears or bulls are going to have to fight to reclaim control, but that hasn't happened yet. So I think for now, um, playing longs is just as good of an argument as playing shorts. I personally will not be taking any trades in the first 30 minutes until Powell starts speaking. And if you're in voice chat, we'll have it live playing out and we'll be listening in. So stay posted. Again, I kind of talked about my plan for tomorrow. On any given day, we'd be playing it very simple. We'd be just looking at um, risk against 5105 and risk against 5060, right? Long 5060, stop loss is a breakdown. Short against 5105, stop loss is a break over. But with tomorrow, since we're expecting a high, high a high volume session and some good volatility, um, the real play may be just to chase. And that sounds dumb, but if we react very positively to what he says, we could break over 5105 and very easily make a run to highs. And then at that point, strength over 5105 would be a good idea for longs. If we react poorly, we could very easily break under 5060, and that opens the door to much lower. So a chase under 5060 would look good. So again, it all depends on you know how he comes out and what the reaction is. But that's my primary plan, is kind of sit on my hands until we get some sort of reaction. And these are the levels I'm playing off of, right? If we break through 5105 and market's reacting positively, I'll be looking at calls. If we get a negative reaction, we break under 60, I'll be playing shorts. If we're in this area where we are right now, I have no interest in trading it.
Okay. Okay.
Hell yeah.
Thank you.
But hell yeah. Again, for those of you guys that stopped in late, these sessions are all recorded. Every session we've done in the past is recorded and posted on our YouTube page. If you guys want to go check those out and refer back to me with any general questions, I'll be sure to get back to you guys as soon as I can. And if you want more, detail, today we talked a lot about the Fed and we talked a lot about Bitcoin and cryptos. So that's what this session will probably be titled. But there's a lot of great topics, such as volume profile, how to pick entries, risk to reward. A lot of great topics posted on the YouTube page. Definitely go give those a look if you haven't already. But um, I got to transition over, start writing the outlook, and definitely have some basketball bets to attend to. So we're gonna wrap the session up here. But shout out to you guys for showing up. I appreciate it, and I hope we have a great day tomorrow. And I'm looking forward to the volatility. On that note, I hope you guys have a great night, and see you guys tomorrow. Hell yeah, you guys have a good one.